Let's bring on board Kunal as well as Naresh and Mahantesh Sabarad as well and decipher what the market mood is like today and where it's going to head from here. Naresh, hi, afternoon. Let me start off with you first. What's the take on the index? Almost 100 points knocked down.
So we continue to be stuck in the range at 21,400, 600 on the downside is now very important. We just went below those levels in the day, but have recovered. On the upside, 22,100 on the Nifty has been a problem. And we keep seeing this volatility in Bank Nifty, one day up, one day down. And overall, the trend remains down for the larger banks. The only one which really did a move was SBI, but the rest of the banking names continue to be in a problem. At the same time, small cap indices had already moved up quite a bit. So from the point of 22,100, we had gone up another 3-5% on the small cap indices, which did not happen with Nifty. So we are seeing some normalization. And we have a lot of stocks which had gone, say, berserk in the last few weeks in the small cap space, in the PSC space, as well as in a lot of other spaces. So a little bit of a cool down would be normal. So for now, expecting this time to be more of a cool down on the small caps, and we continue to be stuck on the Nifty.
I think Hindustan Aeronautics numbers as well came out. There's a dividend announcement there as well. I think a dividend of about 22 rupees per share. And the numbers right now look okay in terms of a sequential basis. There's been a decent pickup coming in there. The profit as well comes in at about 1261 odd crore rupees. That's what they've delivered. And a decent uptick coming in from the year-on-year performance as well. But like I said, the entire PSU pack is surely under pressure. But Kunal, any observations that you're making about the overall market in particular?
See, the only good part right now for the markets is that the put call ratio for both Nifty and Bank Nifty are oversold. In fact, it's not an expiry day today, fortunately, and that's, I think, could be one of the major reasons why you would probably expect the Bank Nifty to start stabilize at current levels. And hopefully tomorrow when we open up day for the indices, if there is any kind of a mild gap down, say of 150, 200 points out for the Bank Nifty, and if the put call ratios remain to be at 0.49, 0.5, what we've seen right now, we could probably expect that the Bank Nifty may sort of get into a stabilizing mode. I would still believe that the likes of SBI and Bank of Baroda could be something which could be a interesting bet at current levels. My sense is that these PSU banking majors are getting into a very strong breakout mode, and looking at the indicators so far, even after this 2% 3% correction for these stocks, they could become good, interesting contra buys from current levels.
Okay, let's wait for those contra-buy signals to emerge properly. But in the meantime, just taking stock of what's happening globally as well, because Indian markets had been underperforming last week, and that continues to be the texture today as well. The European markets have opened well in the green. Asia, of course, most of the markets were shut because of their New Year holidays, etc. But the European markets have opened in the green, and the pre-market rates from US are pretty much flat. So it's not a bad scenario out there, at least across the globe. It's Indian markets which are underperforming a bit. But Mahantesh, let me come to you and discuss a couple of these earnings from the auto sector. Heromotorcorp wasn't a bad set at all. The gross margins improved. They're talking about market share gain. People are looking forward to the performance of the premium segment, but that stock has taken a knock. And now, a lot of these exaggerated moves on the downside.
I don't really think these are exaggerated moves on the downside in the sense that there is a background to that. These stocks had actually rallied quite a bit in the last 1 odd year, something which took their valuations far too ahead with the upcoming moderation. Now, Bharatforge is talking of a moderation. Now, you should understand that between the domestic revenue growth and the export revenue growth, the export revenue growth just doesn't exist. It's just about 4%. In fact, it could potentially moderate into the negative territory. And we might see inflation remaining entrenched, and therefore they having to work with higher costs ahead. Margins could also get suppressed.
Kunal, such a sharp downtick reaction, I guess, would be followed up with some more selling?
Ideally, yes, it should be followed up with some more selling. It depends now on the volumes, the delivery volumes for the stock, the built up in open interest, because the stock is in F&O for these names. But looking at the market texture, it doesn't come as a surprise that many of these stocks are actually showing negative tick for themselves. What matters is if in the next couple of days these stocks get into one more round of selling pressure, but apparently if these stocks come back to their long-term moving averages, 200 DMAs or 100-day moving averages respectively, depending on the beta for these stocks, they could actually be a very good, they could be at a very good juncture to go for a contra buy or maybe some buy on dips or accumulation at lower levels.
Okay, point taken. The numbers for NHPC are just out, and taking first look at the numbers on a year-on-year basis at the consolidated level, there's a bit of a dip when it comes to the profitability. In fact, very large when it comes to the sequential performance. Yes, Q3 is usually a weak quarter, seasonally weak quarter, because there's limited amount of flow in the river. Most of it is frozen, etc. So on a year-on-year basis, it is a bit of a dip that has come in terms of both the top line as well as bottom line, and that's the reason that stock is taking a bigger knock. It was under pressure since the start of the day itself, and even for SJVN, we had seen that the numbers were on the weaker side, and that too had been holding up with a cut of around 18%, I think, for most part of the day. Mahantesh, what's your take on these power PSUs? And not just financiers, I'm talking about generation as well as financiers, Power Grid, NTPC of the world as well.
See, there's been a lot that is happening on the PSU stocks, not just power stocks, also in the railway stocks, which are taking them beyond comfort valuation. Now, what is happening on the power stocks is we will, after a long lull, see a bit of a capex phase once again coming in, particularly on the thermal side, which could help boost some of the generation companies because you will have newer capex being announced. That said, as far as distribution is concerned, it's purely dependent on what the government would like to do in terms of overall pricing situation. We have seen in the past how a company like a Power Grid tariffs are tightly controlled by the government, and any adverse move related to that will quickly mean a collapse in the valuation. Something similar is likely to happen, especially given the fact that many of them have rallied quite a bit in terms of recent stock price rise. So the business outlook for power generation looks better, but not necessarily for power distribution companies.
Kunal, what's your take here? I mean, we were just looking at the data for an
Now have a two-pronged strategy over here is, you have to wait out for a point where the stocks complete their phase of correction. So for individual stocks, it could be different. If stocks are low beta and they've gone through a very slow, gradual, steady rally for themselves, you can't expect a 30, 40, 50% correction to these stocks. Maybe the correction at max could be limited to 10, 15% from their swing highs, and that could be a good opportunity for them to for traders to go for a contra buy position. But for stocks which have risen up significantly high, where there's divergence of almost 50%, 100% from their 200 moving averages, the correction over there could be a lot more steep. So you have to have a two-pronged strategy depending on the beta nature for these stocks. I would believe that that could be a very good opportunity for someone who's missed out on the rally earlier or who's looking to accumulate or add further.
Okay, point taken. So those are the recommendations on some of these individual power names. Let's do one thing. Let's take a breather on the show. But as we do that, listen into the commentary that we got on the sideline of Global Business Summit, because a whole host of policymakers and the heads of corporate India joined us there, and they all talked about how it is just the beginning of India's Amrit Kal.
When you compound the aspirations of the people, when you recognize that we already are an economy, the fifth largest in the world, expected to be the third largest in the next 3 years, 2.5, 3 years, an economy which will not only be a $5 trillion on a nominal US dollar GDP basis, but also which has a purchasing power parity, which is at least 2.5 times that. This has prepared the nation to aspire to add $30 trillion in the Amrit Kal, the next 25 years.
This is a sector which will reward you, because for the next 3 decades, the demand is actually going to be slightly more than the supply. My challenge, my huge challenge is to make sure that the supply keeps pace with the demand, add capacities, add generation, add transmission. And we've added a lot of transmission, etc. We've added almost about 200,000 circuit kilometers of transmission in my time. But I have to add more.
The size of automobile industry when I taken charge as a minister, it was 7.5 lakh crore. At that time, our number was 7. And this is the industry which is giving maximum GST to the state government and central government. This is the industry which creates 4 crore 50 lakh jobs. This is the industry which is giving maximum export. And today I am telling you, now after 7 years, our number is third. We just surpassed Japan, Now the first number is China, second is USA, and third is India. And as a transport minister, my mission and my ambition is within 5 years, India will become a #1 automobile manufacturing hub in the world.
We are targeting $300 billion production in the coming few years and about $100 billion exports in the coming few years.
Back with closing trades right here on 18 hours, still in the red as we speak right now, and we're definitely the region underperformers because Europe has started off well in the green, 0.5% lower, 100 points knockoff on the Nifty futures. While sure enough, there are winners like an MRF, Astral, DRL, Coforge as well as Zydus Life. But there are many names which continue to reel under pressure. DRL, of course, has been strong from the word go today. Zydus Life now at the day's highs with a 6.5% move. Coforge is also going very strong, as is Astral, along with Divi's and Wipro too. But the MSCI rebalancing announcement is set to be taking place, and the adjustment kicks in later this month. Which are the key inclusions in the rejig and which are the ones which are getting ousted? Samit is here with the details.
Well, a couple of adjustments that are expected to happen this week, or at least be announced this week. Firstly, on the MSCI front, the announcement is expected to come in tomorrow. An adjustment relating to the same will happen on February 29th. Analysts are expecting an inflow of anywhere between 800 million to $1 billion on the back of inclusions and additions that we are going to see. NMDC, firstly, will be in focus. Inflows of around $186 million is expected in that stock, and that is nearly 3.5 times its 20-day average volume. Apart from that, it's PNB, BHAL, Union Bank, NHPC and Jindal Stainless, which would remain in focus because inflows of anywhere between $228 million to $156 million is expected in these stocks, which are anywhere between 0.9 times to 5.6 times that 20-day average volume. Now, these are the possible inclusions in the MSCI Global Standard Index. Apart from that, in the small cap index, the top 5 stocks that are expected to see the highest inflow includes the list of RR Cable, JP Associates, Honasa Consumer, Cello World and IRDA, and inflows of anywhere between $5 to $12 million are expected in these stocks over the gradual period of time. Now, apart from that, FTSE announcement is also expected on February 16th, and inflows related to same will be coming in on March 15th in the last 30 minutes. Now, top 5 companies that would see the highest in which could see inflows of anywhere between $47 to $124 million on the back of them getting added in the FTSE index. Apart from this, top 5 companies that could see the most volume action on the back of inflows is firstly RVNL, SJVN, Bank of Maharashtra, Mazgaon Dock and Kalyan Jewellers. The inflows are expected to be anywhere between $13 to $33 million, which would be anywhere between 1.6 to 7.8 times that 20-day average volume. So keep an eye out for all these stocks in trade.
Absolutely, we'll keep an eye out for that. Thanks, Amit, for that. Keeping an eye out for Tega Industries as well. Not that the earnings came today. I think they came last week, actually, but that stock is reacting right now. Even the earnings call, etc. had happened, so not really sure of what commentary Street is picking up. But talking about commentary, that's really hitting hard for bharatforge because the moderation in demand that they have flagged off is something which is making the Street a bit nervous. But let me take it across to Naresh to get a sense on a couple of these counters. Star Cement, of course, it's up around 7% if you track this one. And MRF, that's a big heavyweight in terms of the value. I'm not sure of how the volume per cup is on that one, but the stock is up 5%. Naresh?
So Star Cement has been trending positively for the last many months, and we've seen a lot of cement stocks do well, whether it is Ambuja, ACC, or even a smaller name like NCL. So the trend looks positive. Dips to 200 remain a buy on Star Cement as such. So structurally positive on Star Cement. Then looking into MRF, I would expect some bit of a consolidation out here around these prices, because what has happened, if you look at the rest of the names like Apollo Tyres, JK Tyres, they've all seen some bit of a correction. MRF is the only one which has come back to the recent highs. So not a positive trade out here. So would actually look to book profits if somebody has.
HeromotorCorp and see what that stock is up to, because even though the numbers were largely in line and the fact that they actually gained market share in Q3, expensive valuations, the run-up which has been very steep in any case in the last 6 months, that surely has been hurting the stock, and it tumbled about almost 5% to start off trade with. Although the management has been very categorical in saying that the margins are going to improve going forward. But you think Kunal, the rally which began very nicely, and I think it was Bajaj Auto which kicked it all off within the two-wheeler pack, that's come to a stall for a bit.
Yeah, it's come to a stall for a bit, but I would believe that maybe another 4-5% correction for Hero MotoCorp, and it could actually be a good entry point for the names. For example, today you've seen M&M being a lot more resilient. The stock is positive. Maruti, on the other hand, the stock is still trading at the 10,700, 750 odd mark, the last I had seen. So, which means that many of these auto stocks are not participating as sharply as for Hero MotoCorp would look to initiate fresh buys or fresh longs on the stock.
Okay, so that's a take on Hero MotoCorp. 3-4% correction could be a good entry point. But Mahantesh, before I let you go, last word on pharma sector, because that's clearly bucking the trend. What's your view on the likes of Aurobindo Pharma, Zydus Life, Dr. Reddy's, if you track any of these names?
Not really track any of these names, but generally speaking, the pharma sectors tend to gain whenever the markets become a little jittery. As you are aware, they are termed to be the defensive stocks. Another development as far as the pharma companies are concerned is that the overall pricing pressure that was visible for many of them in the US market, particularly on the generic side, is gradually waning off. And there are new products that will start coming up in terms of launches for a lot of pharma companies. So a bit of good news could be expected ahead on the top line side, where pricing pressure having gone, new products coming in, we should generally see better growth on the top line, and thereby aiding a bit of margin expansion. So sectorally, all these headwinds that they had faced in the past are gradually going away for the sector to emerge better.
Point taken, Mahantesh. On that note, we let you go. Thanks so much for joining us today.